Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah, and it's Friday, and it's an interesting end to the week, which where we were expecting a rally. We've been talking about a rally for a long time, for the last few days. There was a rally which got sold into. Today, the global cues are positive, and therefore, who knows? We might see a bit of an uptick as well. But I must say the sentiment is a lot more skittish. I was proven wrong per se. I thought there would be a rally in place for the better part of this week. It hasn't been exactly one. Let's take stock of the global news flow first and bring up what's happened. So European markets closed higher, by the way. They trimmed losses as the Eurozone inflation eased to 8.5%. Can you imagine? It's eased to 8.5%. The US two-year Treasury yield, though, reached the highest levels not seen in more than a decade. Sugar futures held near 1 month highs on shrinking crop prospects. If anything, that's not great news for inflation. And amongst other things, Foxconn has committed to new electronics manufacturing in India. From what I read, it's coming up in Telangana. They've gotten land worth 250 crores or otherwise for free from the Telangana government. And I think the releases stated that they might have to do, or they might create job opportunities worth, or rather of nearly a lakh employees, which is actually great news. That's the global news flow. The US markets, as I said, will come up on the screen and about a percent, so good going there. The yield would be a problem. It would have inched up even more from the 3.93 mark that we saw yesterday. We saw slightly higher than 4, right? Now up at 4.06. So that continues to be a problem area for the markets. Dollar index at steady. VIX, in fact, came off as well in the US. The SGX Nifty should be showing an uptick. I presume it should be an uptick looking at the global cues. So we might start off well. The question is, can we sustain from those levels? That's the key thing. Bring up the trade setup. So the global markets led uptick possible, I think, but sentiment still skittish. Key auto stocks close at the lowest point of the day after opening higher and may underperform today. This is a statistic that a lot of technical traders watch out for. If stocks open at the day's high and close at the day's low, that's actually not considered to be a very big positive. And in a flattish market, this might be negative. So the Marutis and a few others of the markets might have a underperforming day today. Let's wait and watch. I could be proven wrong because fundamentally autos are looking okay, except for passenger vehicles, and maybe that is coming to hit them. Let's wait and watch if that happens. Real estate, though, is a different kettle of fish. It now closed above the 20 DEMA and could see further traction today, I presume. Remember, since the Jeffries note has come and since the data around how sales numbers being lower but still okay, real estate has staged a bounce back. 4 or 5 straight days of gains. Maybe there is more in store, so do watch out for that. Macrotech is a classic example, right? The stock went down like a pack of cards and has come up quite dramatically. So good going there. Okay, I've not focused on the FIDI number simply because it'd be skewed by virtue of the investments that the GQG group did in the Adani group stocks yesterday. So I'm not bringing that up. But that principally is the first set of stocks of the day that I think people should watch out for. And there are multiple news flow around this. First, for the whole group at large, GQG Partners, a US-based boutique firm, invested about 154 billion rupees or $1.87 billion in Adani Group via stakes in various group companies. A lot of large bulk deals or block deals happened yesterday. Viewers, you would remember GQG Partners. For people who didn't know, that's GQG Partners which did this. It gives the group much needed liquidity, so to say, on the perception basis, and certainly is a positive. The key is the stocks have rallied already quite a bit, so bear that in mind. And I still repeat, I think it's very difficult to figure out if this means that the stocks will necessarily move up multiple percentage points from where they are right now. Had this happened without there being an underlying rally for the last 2 or 3 days in the group, I would have just come out and said that this is a big positive, and it is a big positive. That therefore, that from a trading perspective, this looks very constructive. It still looks constructive, but just bear in mind that a bit of a rally has been behind us. Now, also keep in mind that the Adani firms are going to attend the Deutsche Bank investor meet in Gujarat. Yeah, we'll get to that as well. They are going to raise the Deutsche Bank investor event in Gujarat, and therefore that too could keep the stocks excited. There is also a release that Adani Green Energy now has 700 megawatt wind solar hybrid uh, operational, which takes their operating wind solar hybrid portfolio to 2,140 megawatts. So it is not a small set of operations. Now, the one caveat, or not caveat really, but the one disclosure that I want to make is that the Adani Group is in the process of acquiring 49% stake in Quintillion Business Media, which is the owner of BQ Pine, the platform that you're watching. Viewers, as boring as it sounds, for full disclosure reasons, every time I talk about Adani Group stock, and which may be every day considering the news flow in that group, I will bring out this disclaimer just so that everybody's aware of the fact that they are in the process of acquiring the platforms that you're watching. Okay. This news flow should be positive for the Adani Group stocks. Then Alembic Pharmaceuticals as a negative, and a big negative to itself. Now, the company will take impairment charge of about 1,150 crore rupees on 3 manufacturing facilities under construction in Gujarat. Now, these 3 plants are expected to take a hit to the profitability and generate less cash than expected due to US price erosion as well as higher interest rates. Just for an alert perspective, the write-off or the impairment amount constitutes nearly 25% of the total net worth of Alembic Pharma. It's a given slam dunk for Alembic Pharmaceuticals today. Don't be surprised if it opens with a large gap down. So watch out for this one. All I'm saying is don't think of trading it because it'll open gap down and possibly you won't get a chance to trade. But it will open down. You should know why. So there's a large impairment. It also brings into focus the kind of price erosion that's happening in the US, and which is why the likes of Aditya Khemka or some of the others, Mahesh Patil, who spoke to us last week when we were talking about pharmaceutical stocks, are saying, let's stay away from US generic makers. There, the competition is so stressed right now that it's very difficult to find merit into buying those stocks. So essentially, US generic makers would, and some of them would, Sun Pharmaceuticals, like a large US generic portfolio, but also has a specialty portfolio. But all of these companies have a large US generic portfolio: Sun Pharma, Aurobindo Pharma, Lupin, Dr. Reddy's. So be mindful of some of these names. Please study them before you buy them. Then Mahindra & Mahindra Financial Services could be in focus. The February data is out. Total disbursements increased to about 53%. Collection efficiency, slipped a little bit, but 97% is okay versus 98% a year ago. Adequate liquidity buffer to cover fund requirements for 3 months, according to the company. But the disbursements is positive. Who knows, may react. Natco Pharma, the board of the company will meet on March 8th to consider a buyback. Does this shore up the stock? Let's wait and watch. Filhal, the market is not interested in pharmaceuticals, so just bear that in mind. But this could shore up the stock a little bit. Yes Bank, SBI, according to Reuters, SBI may look to cut Yes Bank stake once the lock-in ends. Now, just want to fill you in. There are 2 dates doing the rounds, 6th March and 13th March, when the lock-in ends. Now, I was under the impression that in 6th March, my colleague Vishwanath is saying that the funds came in technically on the 13th of March, and therefore the lock-in technically ends on the 13th of March. So just be mindful, if you're a trader in Yes Bank, that the dates are still not completely certain. I would trust Vishwanath, and therefore I believe that 13th March is the date. But please do your checks if you're indeed a trader into Yes Bank. And if you believe that once the lock-in ends, a lot of people, including SBI, may come on and sell the stake. Who knows? This is a Reuters story. We don't have any confirmation of the same. A stock in focus is certainly Suprajit Engineering. It gained about 3.5% on Thursday, with more than 8 times the average monthly traded volume and 5x delivery volumes. The stock has broken out above a strong resistance levels of 350. I think it closed at about 372. And the stock has been in an uptrend since the last 1 month, having gained 15%. So stock in an uptrend, crossing a strong resistance on very high volumes. I would suspect that a lot of people will believe that these stocks may do well. Now, you would ask why I'm highlighting this versus others. Well, it's not me. It's essentially a brokerage firm which has highlighted this in their alternative research piece. I'm just bringing it to you because I thought the data was very, very interesting. So watch out for Suprajit Engineering. If it gains, you would know that there's some method to the madness. There is a bit of attraction that's been happening for the last few days. So watch out for Superajit as well. Some brokerage calls. Shree Cement has been cut to sell at Goldman Sachs. The price target of 23550. Dalmia Bharat has been raised to a neutral again at Goldman. Price target 1950. Coforge has been rated a new buy at HSBC. Price target 5310. Keep in mind, um, IT kind of withstood some bit of selling pressure yesterday. Some of these stocks, who knows, might have some traction. So watch out for that. But I will also watch out for Shree Cement being cut to sell at Goldman. The only problem with the Shree is that relative to the others, it's not as heavily traded a counter. So please be careful. It may not be as easy to trade as Shree Cement. Lastly, viewers, um, Chris Wood of Greed and Fear has written his latest note, and I thought one of the excerpts was interesting. He's saying that the markets are now assuming a peak US terminal rate of 5.48% or 33 basis points above the previous peak of 5.15. The new assumed terminal rate feels intuitively too hawkish to him, given that the scale of monetary tightening that has already occurred and given the considerable lags in monetary policy. So effectively, he's saying that while the market may assume something, the market assumes things wrongly on the downside, is too hawkish on the upside. He believes that it'll not be as hawkish as things are being made out to be. Let's wait. Let's see. There are enough and more people who believe that with the rate cuts behind us already, the Fed has the ammo to actually go soft much earlier than what the current assumptions are about rate cuts as well. Remember, the rate cut assumptions are now been shifted to 2024 instead of 2023. So who knows how it shapes up. Net, interesting day today. Some bit of an uptick maybe anticipated. Watch out for a bunch of stocks that I spoke about, and watch out for PSU banks. I think that could be a pocket that could be very, very interesting. Day before yesterday, it closed above a particular level. They kind of failed to move above there, but this whole thing about the money coming to the Adani group, 15,000 crores no less, would assuage a lot of fears, and therefore PSU banks and Bank Nifty might be the space to focus on in the session today from a trade perspective, as also real estate, of course. Thanks for tuning into the Trade Setup. Have a fabulous weekend.